Morning, afternoon, wherever you're watching this from. I saw a really interesting article that just came out this weekend. It was titled something like, "What happens when stocks always go up?" And I could not help myself. I said, I need to talk about this week. But before we go into that, so I'm going to do a new structure for this next 2 weeks just to see what happens. Instead of doing one 10 to 15 minute video, we're going to do three to 4 minute videos, short, 5, I don't know, whenever. It'll be shorter. Chop it up and send them out throughout the week just because that's less information to digest, easier on everyone. Right, so let's get into this. So this article basically led us to talk about, they're like, all right, we haven't had a true bear market in so long that last year doesn't even count. Why? It only took 126 days to fully recover back to the absolute high, the height of the market after the very low. That's not a lot of time. You can't even hardly call that a true recession. I mean, everything was down like 34%, the entire market. So, it was doom and gloom everywhere. That's almost half. And all of a sudden, just like that, we're back. Investors these days don't know fear. They have no fear. And now we have celebrities all over the internet screeching things like stocks always go up. Yes and no. Let's talk about this for a second. So on the yes side, it has been true for the history of the markets that over a long enough period of time, the S&P 500 does increase in value over a long enough period of time. That cannot be stressed enough. In the short run, anything is possible. In the long run, which is over the several years, up to a decade, it will typically outperform every other asset class. That's just a fact. It's how it's been. I don't know if that's how it'll be in the future. Nobody knows. If someone tells you they do, don't trust them. But let's keep moving. So why I think this is happening, especially now, is because it's never been easier to get into the markets. There are companies practically banging down your door trying to get you to open an account with them and invest with them. That leads to a whole lot of uneducated people in the markets throwing money at whatever they want and winning. And when people win, it triggers the happy juice in your brain to say, let's do more of this, right? So you've got a whole lot of people hyped up on that winning, continuously pumping money into the markets, blowing it up. Good and bad, right? The good of this is that now we have people in the markets that would never have been there. There are opportunities to create wealth, generational wealth, which I think is really important. I mean, we could basically shift social classes with this, which is just terrific. That's exactly what we want. The negative side is that the educational curve is going to hurt if there is a correction sometime in the next, because there's, again, no proof anything will happen or won't happen. But if there's a correction in the near future, it's going to hurt and it's going to scare a lot of people. And we're really going to see who's been paying attention this whole time. So I'm going to wrap this up with one final thought. Whatever you do, I understand right now that I'm just a dude in a camera talking to the internet. Do not get your financial advice from social media. Please, please don't do it. Do your own research. Stocks don't always go up in the short run, right? So make sure you're protected. All right, I'll see you guys soon.